Hello traders, this is binaryoptions.net.au and today we're going to teach you how to trade with the moving average convergence divergence, or the MACD. The first thing we're going to go through is the overall indicator and how to understand the MACD. The MACD uses two moving averages to indicate turning points and momentum building in a move. Unlike other oscillators, the MACD fluctuates above and below the zero line. It also uses a histogram as a visual aid for momentum building so you can profit from it. This is what the actual MACD looks like. You can see that we have the fast moving average, which is the blue one, and the slow moving average, which is the orange one, and the histogram oscillating above and below the zero line. As you can see, when the fast moving average and the slow moving average diverge from each other, the histogram builds up, which means that momentum is building up, and you can see that also in price action. And when the fast moving average and the slow moving average converge with each other, meaning that they come closer to each other, you can see the histogram growing, building down, meaning that momentum is also building down, and you also can see it on price action. So we are going to use the MACD histogram as an aid to know when to trade and when not to trade the signals. The first signal we're going to go through is a simple moving average crossover. When the fast moving average crosses above the slow moving average, we have a signal to buy puts. And when the fast moving average crosses below the slow moving average, we have a signal to buy calls. For these signals to be valid, the crossover must happen at the MACD extremes. And these signals must be used hand in hand with simple support and resistance levels. And in a bullish signal, the histogram must start to build up the zero line or the zero level, and in a bearish signal, the histogram must start to build down the zero level. So as you can see, this is not just a simple moving average crossover. You need, for the crossover to be valid or the signal to be valid, we must have the crossover at the extremes of the MACD, and we must have momentum building to the upside in a bullish signal and to the downside in a bearish signal. This is an example of a classic MACD crossover with momentum building up. So you can see price came all the way down and started basing at this support area. We have a MACD crossover at a down extreme, and we can see that momentum is building to the upside, and when we break with these highs, we have a trigger to buy calls on this instrument. On the contrary, on this example, we have a MACD crossover to the downside. As you can see here, we have a strong crossover of the fast moving average below the slow moving average. We can also see that momentum is building to the downside, meaning that we have a bearish push at this level of resistance. When we break with this base of this level of support, we have a trigger to buy puts on this instrument. So there you have it. It is not just a simple moving average crossover, but you have to also use the histogram to see if momentum is actually building, because here we have a clear example when not to take the trade. Here we have a MACD crossover, but momentum did not build to the upside, meaning that we were trapped in this very narrow range. Had we take this trade, our option would have expired out of the money. We need momentum to the upside. We need the MACD crossover, and we need a trigger, meaning that we need to break above a significant high or level of resistance for a bullish MACD crossover, and we need a break below a significant level of support, a MACD crossover, and momentum to the downside for a MACD for a bearish MACD signal. the next signal we're going to go through is the centerline crossover setup. A centerline crossover occurs when the slow moving average crosses above or below the zero line. It sounds simple, but it's not as simple as that. When the slow moving average crosses above the zero line, we have a bullish crossover. And when the slow moving average crosses below the zero line, we have a bearish crossover. The reliability of these signals depend on various factors. One, the strength of the move or momentum. We need momentum to build up. So we are going to be focusing on the MACD histogram when these setups occur. And we need strong levels around price action, meaning that we need strong levels to be broken to the up or to the downside in order for these signals or setups to be valid. Here we have a bullish centerline crossover. As you can see here, the slow moving average crosses the zero line, and momentum has already built up from this low. When we take out this high, we have a signal to buy calls on this instrument, and as you can see, our option would have expired in the money. Here we have an example of a bearish centerline crossover. The slow moving average crosses below the zero line, momentum has already built up, and when we take this low or this support level, we have a signal to buy puts on this instrument. So as you can see, this is not just a simple centerline or zero level crossover. We need to be focusing on momentum building and strong levels being taken out. So let's go to the charts and let's go to some live setups right now. Okay, this is the US dollar Canadian dollar 4-hour chart, and as you can see, we have a naked chart in front of us, and we're going to add the MACD indicator. So we go to the MACD indicators, and we use the MACD. We're going to use for this video tradingview.com. The reason we are going to use tradingview.com is because the MACD indicator that comes on the MT4 platform only has one moving average, only has the MACD line, and we need both the MACD and the trigger line. So let's go through some signals that have happened here. Okay, first of all, what we need to do, of course, is to draw our levels of strong support and resistance. Here we have one, okay, and we have another one right here. Of course, this is the 4-hour chart, and we are going to be trading or actually analyzing price action and looking for setups on the 50-minute chart. But we need to draw the levels of the 4-hour charts because remember, we want to filter out the noise, and we want strong levels that are holding on the 4-hour or daily charts. Okay, the levels that are holding on the 4-hour or daily charts are much stronger than the levels that are holding on the 5-minute chart or on the 50-minute chart. Now that we have these levels, we can go to the 50-minute chart. So there you go. This is the 50-minute chart of the US dollar Canadian dollar, and this is what happened today on this trading session. And as you can see here, we broke with this level of resistance, of support, I'm sorry, that we drew on the 4-hour chart, and we went all the way back down. When we went all the way back down here, we noticed that we had a bullish MACD crossover when price was actually basing at this level of support. Okay, so first step one, we have a base. A base is when price tests a level and then continues to trade on a very narrow range just above it, and then after price starts basing at this level of support, we have a MACD crossover. Second step, we look for the crossover and we got it. Third step, we look for momentum to the upside. Okay, because up until now we only had momentum to the downside, momentum building below the zero line. This is not a good um, setup for a long trade or for buying calls at this time. But when we get the crossover, the bullish MACD crossover, and then the histogram starts to print above the zero line, and we get this big bullish engulfing candle, we have a signal to buy calls on this currency pair. And if we choose to trade the hourly expiration, our option would have expired in the money. So let's put a big arrow here as our first setup and our first valid setup. So as you can see here, we waited until the MACD crossover was at an extreme. We waited for price to base at a support area. We waited for confirmation from the candlesticks. We had a bullish engulfing candle, and we waited for the histogram to start printing to the upside, meaning that we were starting to have momentum to the upside. So here's the first signal that we can find. And as you can see here, we have crossovers in the middle of this narrow range, but these crossovers are not at the MACD extremes, and the histogram is not printing big momentum. So these are not valid setups. This, on the other hand, is a valid setup. Why is this a valid setup? We have a high right here, okay? This level of resistance right here on the 15-minute chart. So we are tracking this level of resistance on the 15-minute chart, and we wait out all this choppiness and narrow range, okay? When price comes all the way up here, we have a MACD crossover at an extreme, and the histogram starts printing to the downside. When this happens, we notice that we have two candles that clearly reject this area of resistance, and we can buy puts on this currency pair right now, and an hourly expiration would have made our option expire in the money. So let's put another arrow here, because this is the second signal that we have found. Okay, now if we continue to browse even further back, we can see that we have another bearish MACD crossover right here, when price comes all the way up here to a 4-hour area of resistance, meaning that this area of resistance is very strong. One, we have a very strong area of resistance. Two, price touches the area of resistance and immediately prints a bearish engulfing candle. Three, we have a MACD crossover and momentum building to the downside. But the thing about this setup is that you can see that the momentum starts to fade out, and the price starts to move back up. So if you had taken this entry, your option would have expired in the money if you had chosen an hourly expiration, but an end of day expiration would have given you a winner and without any inconvenience. So you have to be very careful when you choose how to trade, and as you can see, even the strongest setups sometimes might reverse on us. But when price reversed all the way here and printed this kind of evening star formation, and momentum started to build really big to the downside, we could have taken another trade here that would have ended up in the money or expire in the money on the hourly. So we're going to put another arrow here for a clear winner on the hourly, and another arrow here for a clear winner on the daily expirations. And if we continue further, let's go back to what we just went through. Okay, here we have a MACD crossover, but here here we have the MACD crossover. Here we have the retracement and the opportunity that we could have taken when momentum started to move momentum started to build again. But then we have a slow moving average crossover of the center line or the zero level. This happens right here. When the zero line crosses the zero level, we have a bearish engulfing candle and momentum is at its peak. So we can take the trade right here on an hourly expiration that would have ended up in the money, and we can put another arrow here, meaning that we have found a fifth entry with the MACD. And trading with the MACD can be as simple as this, but you need to be careful which setups you are choosing, and remember that you need momentum on each and every single one of them. Okay, you need the crossovers to be at extremes on the MACD, and you need momentum every time you choose to take either a crossover or a center line crossover.